Hello, traders. It is Tuesday, the 1st of October, 2019. It's 8 a.m. Chicago time. This is episode number 1607. Hopefully, you can hear me loud and clear. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is the first day of Q4 2019. We're looking kind of bullish following what I said yesterday about there are some interesting things that happened in the S&Ps yesterday that I will discuss. But let's take a look at the overall sentiment, the overall market position or stance or sentiment or risk allocation, whatever you want to call it, is relatively mixed. There's a slight bullish kind of push. Um, with crude oil leading the pack up 48 cents, trading at 54.55 or 0.9%, followed by the Russell up 6 points, 0.4%. The laggard today are the bonds down a handle and 15 ticks. A handle and 15 ticks. What is that? It's 47 ticks in the futures, down 0.9%. That's quite a bit. The cable is off 59 pips, and the 10-year note in the U.S. down 17 and a half ticks. This is where we stand today. The market closed, the S&P closed kind of strong, and we're trading a little bit above that. The S&Ps are not seeing that big a pop. Um, Trading at 29.86. Settlement in the S&P is much lower than the closing price because the closing price in the S&P was 29.85. So by technically we're only up 4 ticks, but if you look at your quote board, it probably says we're up 7.5 points, 7.7.5 points because settlement was a lot lower. That's just part of the action on quarter end. The official exchange settlement price may be very different than the last price, last trading price. That happens sometimes. Um, in terms of the overall market theme, we're seeing the European indices trading mixed. It says amid mostly higher markets in Asia and higher U.S. futures despite stronger dollar. Gold and oil are higher. U.S. dollars lower versus the pound, higher versus the yen, lower versus the euro. The market is kind of in a holding pattern here. We did pop higher despite the way we were shaping up. We'll see what today brings and whether or not we take out that 91.75 in the S&P above. Here's what I expected yesterday, and there are a couple of key things that I wanted to discuss here, which the market proved wrong very early on, thankfully, to give us an idea that the foundation of the day is not as was anticipated. The primary expectation is for the market to push a little bit higher, as far up as maybe 74-ish or so for the overnight VPOC stat, and then the expectation is for it to turn lower and to walk itself down towards the 2950 area. That did not happen at all. The secondary is responsive selling towards VPOC and the close for a pop through that low volume node. The low volume node is marked right here in green, kind of like the line in the sand, and then to hold steady before we start to sell off into quarter end. This pretty much is the inverse of what happened yesterday. We see that the market opens and it does not get below that key low volume node, does not tackle the prior close, the orange line, and the prior point of control. The market is essentially, even though it's an inside day yesterday after the news day on Friday, the market is actually initiative away from where value was or where the most accepted price is. And that was an early clue we talked about in the convergent chat. This is a big boulder, big foundational piece, so to speak, for setting up the day that, hey, this is not setting up in a way that aligns with the overall context, and we have to take that into account. So you lay off of the shorts in that situation. Although early on, I was giving out caution longs in the way that it was trading. So that's what happened. We pushed where? We pushed right back to the high volume node of the prior day, right on top of 2985, which puts us right back where the news on the um, ban on liquidity to China, or whatever, the ban on Chinese stocks in the U.S. That news, that announcement by POTUS, by Donald Trump, President Trump, it puts us right back in there. So we have discounted the news, another V bottom, another crush on the swing shorts. Must be tough to be a swing short in this market. Um, or a premium seller, for a call premium seller, but it's just overall, the market has come back to touch the scene of the crime almost to the tick. I think it was at 29.8450, something like that. We went to 29.85 right here, pulled back to the mid VWAP area, and then shot up on quarter end flows. The other important thing to note is, as this is happening. We have a market that's flowing upwards on traders hitting the bid as the market is pushing higher. We see that the volume delta is just getting hit. And so we're kind of setting up for a pretty big balance area here. If you look at since we moved down here on the 24th, last Tuesday, we've been in balance in this region, and we are really set up to make a move one way or the other. We've got multiple tops in this 88 to 91 area. 91.50, of course, is the MC low volume node. If you recall from yesterday, from that big red profile, let's bring that in. This is the low volume area, or the cutoff point, 91.50, and we're right up against it. We've tested this from the top. We've tested it from the bottom recently, and we're kind of making our way through it. If we push back through, we're likely to push to the next high volume node, which will be 3,000. One thing to note, as I move this profile forward, as I add the volume for the last day or so, you'll notice that the point of control, there's enough volume here to shift the point of control down. There's the shift of the point of control right there from 3,000 to 2980, 2980 or so by the time it settles in. I think 2979.50. So the point of control has shifted. There's plenty of fuel in this area right now for the next likely move, in my opinion. There's a lot of positioning going on in this balance area. The whole argument hypothesis on the market likely going lower next into 2920 has not changed, because we didn't breach anything. We just held the low volume node here. And we can't judge the bigger picture by the action of just one day, just like we can't judge our overall trading performance by the action of the very next trade. It takes more than that. But as long as we stay below 29.91.50 or so, that region, then we are likely to start pushing, rotating back down. But until then, we may see ourselves in this balance zone. So be aware. That's your context. This is very important to be aware of the bigger picture map of what's going on. Again, we made this move up on some delta divergence here as price was shifting up. It was doing so on lightish volume. Volume was off by maybe, I don't know, 20% or something like that yesterday. Um, so it was drifting up, and there was some bid hitting on the way up that causes the delta, the volume delta, to be lower as price moves up. There's just some discord there. We'll see how that plays out. It's hard to predict what that is likely to lead to. Here's the overnight session. The overnight session just went sideways in the early Asian session, and then took off as Tokyo opened. We pushed to 29.92, right above that 29.9150 area. And then we went sideways for quite some time until the Europeans came in. The Europeans came in, put in a higher high, and drove prices lower. And we've been holding sideways here, right underneath the mid. VWAP's tangled in this area, and we have a double distribution profile overnight. Um, with a point of control in the lower end of the range. We have a weakish looking low. The high looks pretty good in the overnight session. And so that's how things are setting up. It's just this morning the way this overnight session is setting up. It leads me to believe that it's best to keep my fingers off the mouse, my hand off the mouse, until we see which side is likely to drive in the first 15, 20 minutes. Um, I'm seeing a pretty poor low, but yesterday we had a pretty good top and a pretty poor low, and we ended up pushing down just small and then pushing up pretty well. So you can see back here yesterday, this low here was pretty bad, was pretty weak, and then we open up and push higher right away. So we move towards the excess high rather than the weak low. So it's hard to tell. I'm going to let the market just dictate what it wants. The line in the sand this morning is going to be 29.88ish. 29.88 is the low volume node. Mid for the overnight session. We'll see if it can get above it. The volume overnight is relatively light. It's off about 20% as well. So we'll see how that plays out. The overnight session is not giving us good firm clues on what to expect. In terms of the order flow on ctbookmap.pro, we see that it's been a pretty balanced trade overnight. We haven't really accomplished very much in terms of testing. We did push above the 91.50, as I said, but overall the latest action has been sort of trending down, and it's starting to break out against the overall session mid. We see offers up at 94, 75, 95, and 96, and above that at 99 and 3,000. And so overall, it's just it's pretty decently offered down below the bid. The bid looks pretty good in the 29.70, 879 area, but that's about it. It is hard to read when there isn't much volume in play. It is hard to read what the market's intent is. There's that 3020. Remember, 3018, 3020 has been sitting around for a long time, and it's still sitting up there, the big offer there. So that's how things are shaping up currently. Let's take a look at what we're expecting for today. Now, I didn't go over the calendar, but the calendar has ISM manufacturing PMI at 9 Central, 10 Eastern, a half hour after the open, looking for 50.1. We've had multiple Fed speakers come on from 8:50 Eastern through the open, and then we also get construction spending at 10 a.m. But we also get ECB's Draghi at 12:45 p.m. Eastern U.S. time, 11:45 Central, and then API crude oil stocks after the market close. Here's what we're expecting for today. Let's take a look here. So we see that the position that we're in is we are squeezing up against multiple tops that have been put in over multiple days in the last month. Again, let me squish this down. You can see that there's quite a bit going on in this region right here. And that's where we're heading into. We have a high right there. We have a high right there. Um, we're heading into this area that is likely to see a pretty good action once we get into it. We are opening right at 29.8775. The expectation is for an open auction that reverts back. I'm looking for it to fall back into and towards 29.82. I'm looking for it to base here in the 29.80 area, potentially touching the point of control, impulsing up, and I'm pushing through the prior day's high. Now, remember, yesterday I said it looks like it's shaping up to be a lower the lower, the one-time framing on the weekly has been broken on the upside, and it looks like it may rotate over. That's still a distance away. It still can pull back before it starts to push lower, but overall, I got to look at what the market has done, and what the market has done is pop higher and discount the bad news we got on Friday. So I'm looking for this to get tangled up in the 29.91 area, consolidate, and then ultimately squeeze through before it pulls back on the close. So responsive selling, impulse up, out of range, push right through, and then hit those key areas up at 89.50, 91.75 or so. That's what I'm looking for today on the primary scenario as a continuation of the action that we've seen so far. Secondary, Secondary, a small pullback impulse up, so an open test drive, get into 91.75 and then push through the overnight high at 94.50 and then start working 96.75 for a test of 3,000. There's liquidity there. And then we're likely to just consolidate at that 3,000 and finish a little bit lower on the close. But in either case, the secondary scenario is supported by the most recent action, and there's a fair amount. There's not a great base at 80, but there's a fair amount of support below if it can get through this resistance. I expect the resistance to turn into support once we break through. So I'm looking for shorts to get squeezed on the way up into 3,000. Those are the two main ideas. Because they're divergent, I'm gonna sit and wait for the first 20 minutes or so, and stand by to see which side has the control, which side is pushing, and then trade from that direction until the market says otherwise. Again, we want to trade what we see, not what we want to see or imagine. So, but these lines that I'm drawing are simply a path that we may take, and it allows me to just sit and sit and stay focused on what is likely to happen and hang on to those trades once I put them on. Because the biggest problem most traders have is they can do all the homework, they can put on the trade, but they can't hang on to it. And you got to hang on to it for the risk reward to pay for itself long term. Good luck today. I'll catch you tomorrow morning. Take care.